We had the rand firming by roughly 1% against the dollar yesterday. It had stayed within the week's range, though, and supported by inflows into the bond market and the return of investor appetite. We come into this morning, and it's a very different picture we're looking at.
Yeah, good morning, Alishia. It really is flick-flacking all over the show, and volatility still remains kind of the order of the day. We've seen the rand really just following the appetite for global risk very, very closely, and we've breached only temporarily kind of 707 to the downside. I think that's quite a key level. If we break below that on a more sustained basis, then we're probably going to dip below the 7 rand handle, maybe edge towards kind of 695. But this morning, as you say, things have turned a bit sour again, and the rand probably is going to head back up. So I think we're caught in the throes of kind of a 707 up to 722, possibly up as high as 733 range. I still think the bias in the medium term is for a weaker rand, and really that still is a function of this global growth outlook not looking very rosy, and these lingering debt concerns in both Europe and the States just adding fuel to the fire in terms of that dismal global growth.
Of course, we've also seen weaker signs of economic growth here in South Africa, having dashed expectations for an interest rate rise anytime this year. Those, that tightening cycle outlook has been pushed out to anywhere between mid-2012, 2013 even. So how does that lend to this possible weakening scenario moving forward?
Well, exactly. I think that a lot of focus at the moment is on economies that are able to recover as quickly as possible. And I think what investors are probably going to be looking at is those countries that are able to generate a lot of growth internally rather than through their exports. Because let's face it, all of the current countries out there are racing to get as weak a currency as possible. Obviously, the US has been at the forefront of that for a number of months, but now it's starting to recover. So in a weakening currency environment, really the economies that are going to outperform are probably those that can create a lot of internal growth. And as you say, in South Africa's case, the growth is not looking that fantastic. Those retail sales did improve from the previous month's reading, but still remain relatively weak. And I think it's just indicative of an environment where the consumer is reluctant to go out and spend aggressively. There's still not a wholesale kind of optimism surrounding job creation. So so long as demand domestically is not going to be that great, I think the rand will probably underperform on a relative GDP differential perspective.
In that race to the bottom, we've had the Swiss franc very much standing in the spotlight. We've been monitoring that safe haven currency, with it reflecting the anxiety in financial markets. Some saying that it may test a record high in the days ahead, and that after the Swiss National Bank's attempts to curb its strength were being seen as too timid. Is it a case of being too timid, or simply not an effective mechanism in the first place, Michael?
Yeah, I think the only way that we're really going to stop this franc from strengthening is if they actually do ultimately peg it to the euro. I think, any kind of liquidity injections, monetary easing, call it what you like, it's not going to deter those safe haven bulls out there. People are looking for safety in these uncertain times. They're plying into gold, they're plying into the franc, they're plying into the Japanese yen, they're even plying into the US Treasury market, despite the fact that there's a lot of concern surrounding the US economy and its rating. So the message is pretty clear out there. Unless they actually peg the exchange rate, which I'm not convinced as yet they're going to do, I think this franc is going to remain fairly firm.
We get quite a bit of food for thought later today in terms of economic data. We're anticipating retail sales numbers out of the UK and also a slew of numbers out of the US as well. Your broad expectations on those fronts?
Yeah, I think those are going to be critical, as always, to the rand's fortunes going forward. Obviously, if those retail sales figures out of the UK disappoint, and or we get more disappointing housing and labour data from the US this afternoon, then I think risk aversion is really going to take hold again of these markets, and the rand will probably weaken. So it's all about the global growth outlook. I think that's the focus, and it's going to remain the focus until we start seeing more sustainable improvement. And at this stage, it just doesn't seem like that's going to happen, in the short term at least.